Welcome to the Swing Trading with Cycles channel. It is February 4th, 2023. We're going to do an update on Dixie, the US dollar index, the Dixie index. It is January, or as I said, it's February 4th, 2023. It's a Saturday. So we have a complete weekly candle. And if you're not following on Twitter, definitely take a look at the pinned comment. I mentioned this on Twitter. It does look like we may be getting our weekly cycle low here. So this is actually a bullish outside weekly candle. This is your weekly chart. You can see here. Again, as a reminder, an outside candle is a candle that makes a higher high and a higher low. If it closes green, then it's bullish, obviously, and if it closes red, it's bearish, obviously. In this case, it closed green and as a big hammer. So you can see it leaves this tail behind this lower wick. As I always say, a lower wick is a rally on a lower time frame, very bullish, at least for the short term. And I also mentioned this on Twitter, exquisite price action, right? We dipped below the previous weekly cycle low, and that's an important concept, right? This is a cycle low, this is a cycle low, this is a cycle low, right? So we cascaded lower since that top on week 17. And again, that was your 3-year cycle high, just to be crystal clear. That last week of September, that was your 3-year cycle high on week 17. And since then, we cascaded lower. This is kind of amazing. We cascaded lower for exactly 18 weeks. Think about that. That means we just barely made it into a left translated weekly cycle. That's an important concept, this idea that you fall for longer than you rise, right? So the declining phase is longer than the advancing phase. So this advancing phase lasted 17 weeks. And then this decline has lasted 18 weeks, assuming this is the bottom, and obviously it could go longer. And we talked about this in the previous video. While this seemed like a really long decline, it still wasn't left translated because we had a really long rally. So that's so interesting. But also notice that it reversed, right? It found buyers once it broke this low. I hope you're following, you're tracking. This is a false breakdown, folks, right? Like breaking down below this low, and then it just kind of reversed on us, right? Now, what are the implications for that, right? It means if this thing gets really serious, we're going after this cycle low next. Think about that. Like that's all it is. I mean, before we get to that, we're going to have to get to this, right? And I hope you're seeing this. You can see these clusters of price action where there was a retracement, and that's where the buyers kind of showed up. It's the same kind of idea for the natural gas videos if you've been watching them. That's how we had a sense that natural gas might be headed to 360 when it was trading around $6, right? And so your next pivot is around the 97 area, and then 94.6 below that. But before we get to that, we're probably going to have a little weekly cycle rally. No telling how long it's going to last. You can see this last weekly cycle, as we just talked about, lasted 17 weeks. And the one before that actually lasted exactly 17 weeks as well. Although this was obviously a super shallow decline. You've had ones that lasted 26 weeks. This was 12. This was a really short one at 3. This was an even shorter one at 2, although it was extreme in terms of the move up. And so my guess is we probably get something like 4 weeks. And that works out perfectly because, again, talked about this on Twitter as well. We have just started the weekly cycle decline for precious metals. This is silver. I mean, my God, look at this candle. Look at this candle. It pokes up and makes a higher high above the high from week 18. So that's a new high on week 22. And then it just fails. And what kind of candle is this? That's right. That's right, folks. It's the exact opposite as the candle for the Dixie. It's a bearish outside candle. Again, it makes that little, and I mean, once it made a higher high above this candle, that already made it a higher high, a bearish outside candle. But it even pokes all the way up here, which is to say, this is a little bit more advanced, but it's an important concept as you're starting to truly understand price action. This becomes a bearish outside candle of all of these. Like, think about that. If you combined all of these weekly candles, so 1, 2, 3, 4, 5, 6, 7, right? Let me draw that line so that it's crystal clear. You see that? It makes a new high above the highs of all those candles and then breaks below the low, which means it just wiped out gains for the last 7 weeks. Although, to be fair, after this big move up, this was mostly just consolidation, kind of a rounding top in hindsight. But again, we talked about that. It wasn't a coincidence, this line. We needed to break below the low of this candle here that was the high on week 18. But again, We came in, made a new high here in week 2022, and then we failed lower. And so the estimate is a low around March because these cycles for silver tend to be around 27 weeks. So it wouldn't be surprising to me, going back to the Dixie, because we're focusing on the Dixie here. I'll have a separate video about precious metals, but they're obviously highly correlated. It wouldn't surprise me then to see the Dixie have a short little like 5-week rally, right? Right, yeah, like call it 5 weeks. Because basically the ICH, the weekly cycle high for the dollar, would coincide with the ICL for silver and gold and GDX. And again, we'll talk about GDX, gold, and all the rest in that precious metals video. But it wouldn't surprise me then, right, to see something like this then. So like a move up like that before we head down again for another weekly cycle decline, right? Like that's how you kind of think about it. Price can't fall, and I had written this. It was a fail once it went below that level. And again, once we start the weekly cycle decline again, the target will be 97.422. So that's going to be really juicy. Let's say we can even rally to like 106, maybe 105, maybe even 106. That's juicy downside from 106 to get to 107, almost 10 points on something like the world reserve currency. As I've said before, we should expect a pattern of lower lows and lower highs for the dollar for all of 2023 because we're in a long-term downtrend. Let's look at the monthly chart. What am I talking about? Because we're in a downtrend on the quarterly chart. We're actually, and you can see this is a monthly chart. You can see the monthly chart, the monthly candle has gone green. This is another important concept. Again, if we're going to get a violent reversal, that's actually going to maybe even retest like 110, 115. Like some people are talking about, right? Like Norvas, for instance, we would need probably some kind of massive candle in March, something like that, right? And then maybe another massive candle in April. So it's not going to happen out of nowhere. Like we will see it coming. So now it's a question of how vicious is this weekly cycle advance going to be for the month of February, and is it going to stretch into March and give us a candle like that, and into April? That's what it would have to do to really retest those kinds of like upper sort of reaches. This is month 25 of the 3-year cycle cycle. So presumably somewhere around 36 months. And so we're only on month 25, folks. Like you can do that. That's easy math. That's another 10, 11 months of decline potentially. So this is setting up for a potential lower high. But before it does that, important to note that we're setting up for a bullish outside candle. Now notice I'm talking about this all over the place on all time frames. It's such an important concept. So the move has set us up for a potential, because we made a lower low below last month's low, the January candle, and now we're reversing higher. So if we can go above 105.631, that would make this, just to not belabor the point, but like this candle would end up looking something like that, right? Like we would break above that high. Now, to me, because this is a bearish trend, that tells me that we can actually kind of think of this 105 area, 105.63 as potentially some serious resistance. Maybe an area where you might imagine price will turn down. Maybe it actually even turns down before we get right to there because it just can't make it up there because there's a lot of selling pressure. So we're going to watch it, right? But right now, this is setting up for a potential juicy short, again, down to around the 107 area. And you can think about how that comes to light on the monthly chart. The low of this candle right here was around 98. And then you can see like that was your big up month, right? So it would make sense that we're going to come at least below this candle, right? So you're kind of triangulating here a couple of different levels, right? Like this is the big move, right? Like what's that move in terms of percentages? Like from here to this top is a 16% move. And from this bottom to here is only a 10% move. Like that's important, right? So this part of the rally, which was a lot less months than this part, was a lot more orderly. It was slower. You had these higher lows. You had these entire red months. And then you have this kind of rocket ship up. So you go, how many months is that? That's 1, 2, 3. So it takes you 14 months to go 10%. And then you go 17% in 1, 2, 3, 4, 5, 6 months. So that kind of puts it into context for you. So it's not surprising that we would kind of erase this move and make a low below there, below that 98. So again, telling you that 97 area is kind of ripe. So going to be an exciting kind of short. But for now, one could play UUP, right? This is the way you play it. You can see UUP, that upside move is at 28.33. And we're here at 27.79. So you can think of that as potentially upside resistance. So if one were inclined to play UUP calls, that could, I don't know. So the high is 28.33. That tells me maybe you set your target around 28 spot 15, right? Like it may not, I don't know. It's very, very likely it doesn't get all the way back to that high. And so you'd have to plan for that. But with that much acreage, you could easily see a UUP call go up like 2, 3, 4, even fourfold. You buy them really cheap. I won't give any specific advice about strikes or anything, but you can kind of do the math. And again, just kind of try, like this is UUP. You can see clearly it's a new daily cycle, but also be aware this is a gap. So don't be shocked if we get a little bit of a retracement, right? Before a move higher. And this is a bearish trend. I mean, look how this move got wiped out, right? So it wouldn't be crazy just to see this thing peter out next week either. You got to be kind of nimble. Again, I think the bigger opportunity here is for a short. And so if you want to play this little rally, remember that this is a counter trend move. And so you want to be really, really careful about how you play it. The real move, like the real trade, the higher probability trade is going to be after we get a move up like this, right? To play that, right? Like you want to play after this swing high. Now, obviously, it'd be nice to kind of catch this move up as well. But, just pace yourself, I would say. So that's the update on Dixie. Again, it's in 3-year cycle decline. It's in long-term cycle decline. We're in a downtrend on the higher time frames. Let's actually take a peek at what the 12-month chart looks like. Okay, so the 12-month chart is actually just a big old inside yearly candle. So this is a very, very early candle, obviously. Oh, this is UUP. Obviously, same trend as the dollar index itself. And so you see this huge upper wick. Yeah, we're just kind of inside. So it gets really ugly for UUP below 25.36, right? Which is a lot of room to the downside. And what about the Dixie itself? So for the Dixie, that low is 94.629. So again, wouldn't be surprising. Notice what happened. Look at this. That is the 2017 candle that touched the low of the previous year. That is a massive bearish candle in 2020 that went way below the low of the previous year. All that is, you can see, like, we generally go below the low of the previous year in these longer term declines. So, man, this is going to be a nice juicy short when we get a really clear signal. So that is a Dixie update. Again, we'll also do a separate update on precious metals. But this is looking, we're going to have to navigate this weekly cycle advance, which I should also mention is going to coincide with the daily cycle decline for the broader markets. We'll do a separate video on that, but it appears this could be a daily cycle high here. And so it's complex trading because it means that, because what you're really asking yourself is this the weekly cycle high here at week 15, or are we going to get a higher low on the weekly chart and then kind of keep moving? Or is it going to be an early weekly cycle low that's also a higher low? Depends on how you think about it. But right now, this is clearly, this is just a beautiful, look at this beautiful uptrend. Up, higher low, up. So the question is, are we going to do something like this and then like that, right? Or are we going to break below this low, right? Like you could think about this as your real big line in the sand. So below 37.64, you're in some real trouble. That's obviously way lower than where we are here. And so there are going to be signals before that. But that's an important kind of big picture mile marker. So we'll do a separate video on the broader markets as well. But we'll leave it at that. Thanks for watching.